Hello, trading has closed on the 14th of March, 2024. Let's do our disclaimer before we go over our calls and make some predictions. Well, this is my trading plan for Friday, which is March 15th, the Ides of March, 2024. Please make all trades at your own risk. My calls can be wrong. Look for the pattern with the early low, which is this, and tomorrow should have the early high. We said unless we gapped and promptly took out this high from yesterday, we should see lower prices, and so that worked. This is just a reminder of what we said. During the day, we got an ultimate sell signal in the morning. It didn't call the next move, but does set a lower target, which certainly printed. This drop to a new low of day was called false, retraced. This rebound was called false, and that's retraced. Those have all played out. We had this strong down day, but then we had this rally recovering all these lows. This, we'll see, is major support, not just from fib, but also from a trend line. And we recovered all these lows, which means the drop didn't accomplish anything. We had this big move up here, this big drop, which is just backing and filling of the same space, and then a recovery. So if that's maintained, this recovery over all these lows, if that's maintained, it's a bullish pattern. It should take us higher tomorrow, even if we don't close higher. If it's not maintained, and if we gap under this, and because of a wall into the close, we certainly could gap under it. Not saying we will, but if we do, it means this whole move is false, and that should take us much lower. Let's see why. We've been all set for a pullback ever since this high from last week. All we have to do is break this lower trend line with conviction, and so far that hasn't happened. Now, it's been challenged so many times that the odds are it's going to break at some time, but that doesn't mean it's guaranteed to break. And other people have pointed out a rising wedge. The closer you come to the apex of the wedge, the less significance its break is. So if we just piddle around here long enough, that wedge doesn't mean anything to me. And until you break this, it's always possible our analysis is wrong, as we've been saying. Well, here's how we're trying to count this. Let's focus on the last wave, this wave, blue 5. It's possible to count this as a completed 5-wave pattern, and then you have to find some way to count this. So let's focus in just on this. I mean, if we stop here at that support, there is a Fibonacci argument saying we've completed an ABC down. But that isn't the only way you can count this. It's possible this isn't the end of wave red 4. It's possible we're still in the 4th wave. It doesn't break any rules. I mean, if that's 3, we have decent fibs. If that's an A, ABC works for B, and that's C with a good fib relationship to A. So we can't even be certain we've completed the 5th wave. It's a valid count, but so is this one. This could be the end of 4. It could even be A of 4. So we have support here from that trend line we showed. We have support from Fibonacci. So far it's just backing and filling. And there's at least a chance this support could hold. And if it holds, we might piddle around some more. If it breaks, that's a break of the trend line we've been waiting for. But the longer we wait without seeing it, the less willing I am to wait in the market in a strong uptrend. So Friday's pattern is the early high, regardless of where we close. Typically, it's a rally day with a high in the final hour. Failure is a straight line drop. After dropping all day, the market closed over intraday lows. And if that's maintained at the open, that's a bullish pattern and should lead to higher prices even if we don't close higher. There's also support from a trend line. Also, the NASDAQ McClellan oscillator went under its lower Bollinger Band. It hasn't reversed through it yet, but if it does reverse through it, that gives a buy signal. So it's at a level at which reversals can be seen. Now, gapping under today's low changes the picture completely. It breaks a long-standing trend line, and if confirmed, any break has to be confirmed, should lead to a drop of at least a few hundred handles. And that isn't impossible, as futures are a bit lower as I write this, and we have a wall into the close. Now, the all-time high should fall at some time, and if we can't break lower fairly soon, that time could come sooner rather than later. Trying to pick tops is a kind of a dangerous game. I mean, if we gap under this, then our plan's still working. We probably have a top here. But we had a good chance to break lower and didn't do it. And the longer we piddle around without doing it, less time I'm willing to give it. This recovery is a bullish pattern. If we don't gap down tomorrow, if we hold on to this, I think we're going higher. It doesn't mean we have to close higher, but that's what normally happens with tomorrow's daily pattern. And so far, all we've done after this breakout is just fill the empty space. It really hasn't invalidated this break over this lower consolidation. It's just finding support where it needs to find support. Now again, I don't know where we open tomorrow. We open down here, we've broken support. But right now, I'm less convinced than I was a day or two ago that the high's in. There could be some more upside here, but I think I'm hoping the picture is going to be clearer tomorrow. I mean, if that wall gets reversed, fine. But if not, the top might not be in after all. I know it's going to break at some point. So it's the pattern with the early high, usually bullish, closing to the high. If that's not what it is, it's usually a straight line drop. And that's today's call.